Welcome to the Minds and Money online panel, which is subjected driving Africa's growth in mining and mining investment. And where are the opportunities in Africa given the ongoing challenges of COVID-19 and resource nationalism? My name is Charles Vivian from Tavistock, and I'd like to welcome all of you to the panel today, which is, firstly, we have Willem Jacobs, who is COO of Africa and the Middle East from Barrick Gold. We have Owen Hegarty, who's Executive Chairman from EMR Capital. Luke Knight, Director of Portfolio Monitoring from Ahmed Funds. Jeff Quartermain, MD and CEO of Perseus Mining. And Nana Bompe Sangwa, President and CEO of Rosscan Gold. So before I start, I just wanted to say a few words on both topics. They are quite lengthy and of huge interest. And I just wanted to explain that with regards to resource nationalism, it's a complicated issue. I think no one would disagree with that. With regards to border issues that's brought political sovereignty into question. And what seems to be happening in some countries like Tanzania, Mali, Zambia, and DRC, to name a few, that national administrations are trying to keep pace with technical advancement across the mining sector. And I think that with regards to that, another aspect of when resource nationalism has occurred is where political rulers fear losing office or losing support with electorates. And I think it'll be interesting to find a little bit more views and thoughts from the panel in a minute. The second topic we would like to talk about, we are going to discuss, is COVID-19. Now, in February 2020, Africa had its first case of COVID. And since then, it's had a seemingly remarkable recovery. With regards to, as of September 3rd, Africa had more than 1.2 million cases and 30,000 deaths. And this is according to the Lancet Medical Journal. But the WHO predicted that COVID would have as many as 3.3 million deaths. And today, just over 40,000 deaths have actually occurred, sadly. So the reasons for this seemingly remarkable escape seems to me that the median age in Africa under 25 is only 60%, which is half of which in Europe. Obviously, the climate is warmer, and there's a potential pre-existing immunity in some communities. So I'm sure the panel would be of interest to explain to us a little bit how they've been coping with COVID-19 over the year, and with the prospect of a potential vaccine looking into next year, how they may feel that that will assist their own operations or their own investment perspectives with some of the funds that they manage. So let's go diving straight into resource nationalism. And I wanted to firstly ask the question to Willem, if that's okay. And just ask, with your assets at Barrick Gold, how have you been coping with the potential issues with resource nationalism during the course of the year with some of your assets?
Well, as you know, we took over Acacia. We took Acacia private, and at the point of us taking them private, I think the consensus opinion of the world was that the Tanzanian government was in a process of doing resource nationalization. On close scrutiny, you will find out that in that whole period of them freezing mineral rights and mining rights and so on, they never took a right away from anybody. That's a very important first issue. The second issue is that we went through a very arduous 14 months of negotiation of a framework agreement where we settled past sins, and without going into the gory details, there's no question that the tax structures that Acacia followed was designed to pay zero tax to the state. So the state in many ways had every reason to be pissed off why a national asset national assets of world-class potential can be mined and were mined for a decade, and there has been no return to the state other than through royalties. The fair solution in the old Randgold perception, now the Barrick perception, has always been, if there's a 50-50% split between revenues over the life of mine, you can't get fairer than that. And that is exactly what we negotiated through a very complicated framework. The model of the state participating in management of the mine is no new. It's nothing new for us. There's no mine that Randgold had in Africa without the state being an active participant and shareholder in that mine. So there was no challenge in that. The issue is how do you change the government where there was a build-up in inherent resistance to capitalism in a short period of time. In other words, regaining a license to operate, and that was the real issue. So, if you say to me nationalization of asset, I sometimes think that we use nationalization of assets when it suits us. And we do not put the hand in our own bosom and actually do a very fair analysis of, do you as the person renting the flat, do you actually pay the landlord a fair share of the proceeds? Now, just quickly on that, you have to also understand that a lot of the agreements that was done on Africa or in Africa and South America was done at the beginning of the century, 2001, 2002, 2003, in the middle or to the end of the resource boom. And the mining codes were designed to attract investment. Now, we have to ask ourselves the question that that the balance on a mining code is always that there needs to be a balance between geological attractiveness and what you can offer in your mining code. So when you get to the end of a mining boom and you have to readdress things which you have to readdress, and I can tell you Tanzania had to readdress it because their mining code, which was completely and exclusively aimed at attracting an investment, did not deliver any taxes. So there is a moment of catharsis where you have to get away, all the parties has to get away from a legal position to a position of fairness. So my first point to you is that I'm not a person that look at things like this too easily as nationalization of assets. I look at these things as in a very practical way. As long as things end up fairly, you have a license to operate, you work in your license to operate on a continuous basis. There will always be grounds to work something out with your environment and with the government. And that's my position on that.
Yeah, I think you're right. I think the fair way to operate is the fair way to do business. And I just wanted to, that is an interesting aspect. I know that African Barrick, Acacia, Barrick Gold has always had not an issue, but they always had healthy or sometimes unhealthy discussions in Tanzania. But I think that's right, and it's good that things are settling and you're progressing well. But if I could move that question onto Owen from a private equity angle, is that something that, with regards to particular jurisdictions, is that something which you look at with regards to your own investment perspective, where national resource is an issue which may alter your own investment position with regards to making investments?
Well, thank you for that, Charles, that question, and thank you for the opportunity to have a bit of a chat today. And thank you for the question. I have to say that in terms of, governments worldwide, doesn't matter where they are, they're all resource nationalists one way or the other. They're all at the end of the day, they control the mineral tenements, they own the minerals, and they hand out your licenses, whatever they happen to be, exploration, development, mining, a license to operate one way or the other type of thing. So they are your governor, and you must understand that whether you're a foreign investor or a domestic investor, you're at the end of the day only a guest in somebody else's valley, somebody else's province, somebody else's state, etc. So you've got to behave by the codes, by the rules, and so on and so forth. So that's a given in a way. So I suppose the second thing is, and again, it doesn't matter whether you're private equity, in our case, private equity with a soul, we're private equity with operational sort of experience type of thing, or whether you're a long-term sort of mining investor, you are looking for, stability, you're looking for security, you're looking for pretty clear rules and regulations. And as I say, it doesn't matter whether you're PE or BHP, what you want, is a clear runway, right? Your long-term thinkers, planners, and investors. So you want security and we want stability during all that time, among multiple other things type of thing. Like good infrastructure, good access to people, good access to capital, all of those sorts of things. Good access to deposits, and above all, you want the micro, you want the deposits, you want the quality deposits with scale and grade and tons and all of those sorts of things. But above all else, you've got to recognise that you're at the end of the day a guest there. Again, whether you're domestic or international or foreign or what have you, and you want a reasonable regime of rules. Doesn't mean that you can't sort of help to improve the rules. There's nothing that anybody does that can't be improved one way or the other. But and work with people. And I think Willem was making the point there towards the end that you've actually got to get in, recognise where there's some improvements or changes need to be made, and get on and work with people to be able to do it, whether it's at the community level or whether it's at the government level. Charles, that's my point there.
No, I totally agree with you, Owen, and even Willem's point is an agreement as well. I mean, it seems that engagement with administrations and ministries has to improve possibly with the way the world is at the moment. And Nana, I'd love to hear your views, especially with the transitional government in Mali, with your assets there. How are you engaging with the transitional government in Mali, for example, as well as what are your views on the national resourcism in terms of your assets at the moment?
Thanks for the question, Charles. So I just got back from Mali. I had a series of meetings with the DNGM and the new Minister of Mines, and I think it went quite well. They are engaged. They want to get the business of the country going. And unlike discussions or rumors that were circulating that there's yet another change in the mining code, my understanding is really that's not the case, and the code that was approved is going to be effective very soon, and people can go about with the normal codes of business, applying for permits and arretes and whatnot. So I think the country has really stabilized. There was sort of a popular uprising by the people, and they wanted change. Social economic conditions were terrible, and it's one of the more peaceful transition of powers we've seen in the recent while. So I think it's well positioned to be more stable as they usher in elections for a democratic elected government in 18 months. And just like we saw in a lot of the states in Africa that had now boasting of solid democracy, they went through that transition phase and then eventually matured into stable democracies. And it looks like the international community is very well aware of the problems to the north, and they are well vested not to create a vacuum in Mali, which would have impact the whole sub-region. So felt very comfortable whilst I was in country. And I think the country is, well, I mean, heading into a beautiful spot, from my opinion. On the resource nationalism topic, I try to call it differently because, like what William said, they welcome you into their countries based on certain criteria to attract investments, and the commodity markets change over time. And I don't think it's an African problem. It's going to be a global problem right now as we see global economies falter. And if the predictions we're seeing on commodities are right, then the commodity space is going to be churning in a lot of profits. And there'll be handouts coming from everywhere to get a little bit more to boost our economy. So that's a discussion that needs to be had. And I think each stakeholder should recognize the importance of the other. And I think once maturity prevails, the goalposts wouldn't be moved significantly. At our phase being an explorer, I mean, the impact is a little bit muted because there are no ready revenues to go after. So we definitely get a bit sheltered, but obviously if the goalpost is changed significantly, it just destroys the investment appetite and appeal for what we're doing.
Yeah, no, I think that's right. I think in terms of transition governments, we're seeing a lot of healthy transition compared to 20, 40 years ago with regards to democratic change of government where transition has happened safely rather than with drama. And on this, Luke, I know at Ahmed you have a number of investments all across the continent, from the East Coast, West Coast. What is your view in terms of the resource nationalism argument, in terms of when you decide to make a judgment call on making an investment? And does a particular jurisdiction worry you? Are there particular aspects of an administration's manifesto that could impact, or is it just purely on the bare nuts and bolts of an operation in the mining company?
Yeah, thanks for the question there, Charles. You know, obviously, I think it's a little bit different if you're a producer than if you're an explorer or a developer, or in our case, when we fund exploration and development. What we need there is certainty and clarity in the rules in which we need to abide by, you know, for our investment decision, and that's critical for us because when we invest in a project that has a resource and we want to drive that forward to, say, a definitive feasibility study and then on into production, there's a very long lead time. And that long lead time can be 10, sometimes even 15 years. Quite a bit of capital is expended. That's risk capital from your shareholders. So what's important to us is a level of clarity and that the conditions remain roughly the same during that period. Now, you're not always going to get that. But in respect of resource nationalism, I think there's some misconceptions because it's not just expropriation. You know, people think of resource nationalism and they think expropriation, the sort of things that happen in Zambia in the past, Kenya, other domiciles. Look, I think we've moved well past that, and I don't think that's going to happen moving forward. And I don't think there's a risk of that unless companies have misbehaved or behaved inappropriately. But what we do have at the moment is a bit of what would we call it, creeping resource nationalism, where governments are under pressure, and they will be under pressure after COVID. You know, particularly populist governments, where you know they've got to appease the people. You know, so you get this creeping resource nationalisation. You know, increasing tax pressures. I mean, think of super profit taxes, these sorts of things, and that's not Africa alone. Australia dabbled with that a few years ago. That was very unpopular. You've got increasing royalties. Think the DRC. You know, you just declare something a strategic mineral and it goes from 2% to 10%. Well, I tell you what, if you've just invested 1.3 billion in a mining operation and your royalty just went up 5 times, that has a significant impact on the investment climate, and it has a significant impact for people wanting to invest in that domicile in the future. You've got rules for stronger local content, which I agree with. But unfortunately, in a lot of those domiciles, they're not prepared and they don't have the infrastructure or the facilities for stronger local content. So if you arbitrarily make these rule changes and it's not possible, you've got this sort of, in legal terms, supervening impossibility of performance. You can't perform in terms of the law because the infrastructure is not there and not available. So that presents problems. Changes in contractual terms for your mining contracts, these sorts of things, if they happen arbitrarily, that certainly affects the investment climate. And then you've got local beneficiation requirements. So I think all of these add up to some degree of resource nationalisation. I call it creeping resource nationalisation. Now, I agree with the reasoning for a lot of governments and why they're doing this, but they've got to tie that into the fact that we need that, again, certainty and clarity in the regulatory environment for us to make investments. Now, for us at AMED Funds, when we look at different domiciles, we certainly take that into consideration. If we think a government's going to arbitrarily change the rules, then the resource we're looking at in that country needs to be a dripping roast. It affects what you're willing to invest in, depending on the domicile. If you've got a perceived higher risk, then projects that are below the line or above the line in other domiciles, you might not necessarily look at investing in those domiciles. So it certainly has an effect for us. There is some countries in Africa we will not invest in. I'm not really willing to name these at this point in time, but there are some, and that's generally because of levels of corruption that we're not comfortable with, governments that are liable to change the rules on an ad hoc basis, and those sorts of things. But in general, across the board in Africa, most countries, most domiciles, we are willing to invest in. Obviously, for us, commodity specific is important. Niche commodities, they need to be marketable for us. So if it's a marketable commodity, we'll certainly look at investing. And for us, we specialize in investments in Africa. We geographically domiciled for investment in Africa, and that's where our skill set lies. And I think in all of these domiciles, it's incredibly important how you interact with the government and the regulatory body. I think somebody else mentioned that, you're in their neck of the woods. They're their minerals, it's their deposits, it's their government, and it's their people that they want to advance via the foreign investment that you provide. And you've got to be respectful of that. You've got to understand the local conditions, and you've got to work very closely with government every step of the way. If you display a degree of arrogance and you don't consider the local condition, then I think you're always going to bump into problems. So it's a matter of mutual respect. We need to make a return on our investment. And if we invest in the projects we like to invest in, there'll be a return to the people of that country as well via taxation and other benefits. But yeah, I think this creeping resource nationalism is important because it steadily erodes the attractiveness of certain domiciles for investment. Definitely for us, it does.
Yeah, it's interesting. Especially your point on beneficiation. That's something that's becoming more and more topical, and how mining operators and companies can actually assist a little bit more margin in terms of going into their own, to places where they're actually operating. And Jeff, thank you very much for being so patient when listening to all of the panel's comments. And for a company that has assets in Ghana and Cote d'Ivoire, which arguably have less issues compared to other countries in Africa, how are you understanding or dealing with this issue of resource nationalism, or is it something that is not really as impactful with Perseus?
Well, look, speaking at the end of the line, there's very little left for me to say, I have to say, because actually my colleagues have articulated it very, very well. Look, from Perseus's point of view, I don't actually like the term resource nationalism terribly much. I mean, I think something more along the lines of, making sure that everybody gets their fair share is a more realistic assessment of the thing. And as far as Perseus is concerned, I mean, our corporate mission is to generate benefits for all of our stakeholders in fair and equitable proportions. So we recognise right from the get-go that whatever we do has to be distributed fairly to all of our stakeholders, be it shareholders, be it debt financiers, be it governments, host communities, employees, suppliers of goods and services. And it's a pretty simple thing, really. If one group feels that they're not getting their fair share, then they're going to object to that quite strenuously. Now, If that's the government who's objecting strenuously, then perhaps that's the resource nationalism that you're talking about. So, look, I think going into situations like we have done, being fully aware of this right from the get-go, and then setting all of our strategies to make sure that everything we do is orientated towards being consistent with our beliefs and making sure that everybody does get a fair cut of the action, then I think that puts you into a reasonably strong place. I think the thing that people do need to understand is that these governments that we're talking about, I mean, in fact, governments all around the world, they're aiming by and large to make the life of their citizens better. And so everything they do is orientated towards that. And I guess in times like now, in the gold industry, for instance, when gold price is very high and it's pretty clear that that companies are doing quite well, it's not surprising that governments might say, well, look, a little bit more of that coming our way would be helpful in terms of us delivering our programs to our people. And I think that's the sort of thing that you see. And Luke was, referring to creeping nationalism. I think that's absolutely the case. I mean, certainly localization in terms of, the beneficiation, et cetera, et cetera. You can absolutely see where they're coming from. And for us, it isn't an issue. We just deal with it and we get on with it. I mean, in fact, in our Ghanaian mine, for instance, we have 99% of our people are Ghanaian people. Nearly, I think almost 100% of our contractors are Ghanaian contractors. It makes no difference to the way we do business. We've just adapted to it. We understand what is required and we get on with life. And it's pretty simple, really.
And Jeff, do you think that the fact that resource nationalism has become more topical, is that something that, do you think ESG for mining operators, especially, mid-cap producers, is becoming more and more important to try and give something back to the countries where you operate?
Well, look, I don't think mining nationalism is a big deal. I mean, you're saying that it is. I mean, it's just one of the things that's out there, right? So, I mean, it's not a bit, any greater than any other issue. Now, when it comes to ESG, I mean, I'm kind of a little bit amused by the way that, this has really whipped itself up into flavour of the month. And at Indaba this year, I mean, you couldn't talk to anybody unless, ESG was the topic of conversation. For us at Perseus, we have been working from day one to make sure that all of our stakeholders receive benefits. So the way we've done our business has in current parlance is, right down the alley of ESG. I think the thing that we've done very poorly at Perseus over the years is articulate what we have actually done. And that is something that we're trying to address right now, because quite clearly there's a lot of box tickers out there who are marking public comments around the benefits that you actually deliver to all of your stakeholders, et cetera, and that's quite influential. So we do need to articulate our achievements far more vocally. But I guess in keeping under the radar, as it were, I mean, there was method in the madness, because what does happen in African countries, and I'm sure that all of my colleagues on the panel have had this sort of experience. I mean, the minute you sort of step up and try to, present yourself as, some sort of outstanding leader of, provider for the people, you'll have a very long queue of people with their hand up, because there are a very long queue of people who need a lot of help in many of these countries. So from our perspective, I mean, we do exactly what we need to do to make sure that our communities are well provided for, that they want us to be there, that they get a net benefit out of our presence there, and same for the government. And I think that, so people can call it whatever you will, ESG or whatever else, we call it good business sense.
Very good. Good to hear that. And Willem, just a question to you. I've seen the website. You have a very, very detailed engagement and development sort of chapter on the website there. And I just felt that, is that something you felt is going to help not just your local communities, workforce, training, but also, is that something that you can really, you can explain to the government and ministries that that's something that you really are giving back to where you up to the place, to operations where you operate?
Well, to an extent, I actually believe a little bit the same as Jeff. I think this has been a cornerstone, certainly, of Randgold ever since we started 30 years ago. And what we put in our annual reports and so on is we never sold anything, we communicated things. So if your commitment is towards zero harm, we go to the end of the world to communicate that. Why is it important? It is important for people in the community to understand that what we measure, what we do, and that we communicate honestly. And just to be clear on this, we rediscover ourselves every year in many areas where we decide, where we measure better, the better equipment out. We decide that this is an area that we can focus on to make the world a better place. We have never spent 2 seconds of time on thinking of how we can make something which looks brown, smells badly, into chocolate. So it's never about selling a bad concept. It is always about trying to live up, not trying to, with an active involvement in living up, that we do what we do in a responsible way. None of us can dispute the fact that mining affects the environment in a negative way. There's none of us can say that. We're not horticulturists. We actually mine this. We dig holes. We've got massive dumps that we leave behind. We've got, if you're not careful, you've got acid running down the sides of the dumps, etc. If you're not careful, you damage the underground water structures and so on. And that's why it's important. You have to be consistently reminding yourself that you have to, while you are living in this generation and supplying metals and minerals to the current generation, you have to leave this world in a way that future generations can live responsibly from it as well. So I also think that, now that it's become an investment criteria that you have to tick boxes, what you've done in ESG, it's got that smell to me where it's becoming something which is, again, a tick box exercise instead of where it comes from your heart and what you believe. And that is what all of us have to make very clear to ourselves, that we have to do this because we actually believe in it. It's not because we have to tick a box in order to qualify for an investment portion, or certain funds only invest in mines like that and so on.
Sure. No, I think that's
part of our DNA. It's absolutely part of our DNA, and that's why we're spending so much time in explaining to people. But it's not to impress people. It is part of our responsibility to communicate honestly what we're doing.
Yeah, and I'm just conscious of time, so I do want to talk to you all about COVID-19. But Owen, just on one more question on this, and I'm going to try and get around the whole panel on one more question on resource nationalism, which is really on the fact that the world isn't getting any bigger, right? And therefore, it's all about balance. It's all about balancing to ensure that where you operate or where you invest are happy with those investments or the operators, and at the same time, the nature of an investor, because millennials are getting older every year, maybe ESG or their way of thinking is changing generationally. How does that impact your investment perceptions or criteria looking ahead to the future?
Yes, look, a very good question, Charles. Thank you very much for that one. But look, I think that, yes, all of these things sort of move in time. And as we said a little bit earlier, we're improving whatever it is that we do. And governments and all stakeholders are actually, making those improvements. As I say to my staff regularly, the biggest room in the world is the room for improvement type of thing. So no worries there. And just coming back to a couple of very good points made there a bit earlier about ESG. And I think that this is, there's no question it's full frontal and centre a piece as well type of thing. But it tends to be more sort of form than content, in the sense that, you know, we've actually been doing it for a long period of time. It didn't just come down in the last shower type of thing there, Charles. We've been at it for a while. You have a look at the ICMM, you have a look at the Equator Principles, the IFC, the World Bank, the rules and regulations, the AusIMM, and the various codes of this, that, and the other thing sort of around the world. You know, there's a lot of them. And by the way, we don't consider them to be a burden. We consider them to be, you know, part of the way in which we have to operate. You know, they're our sustainability mantle, if you like, whether it's environmental care and management and long-term sustainability of the sites and the water and so on and so forth, whether it's a social responsibility and the way in which you go about working with the local communities, the local governments, the local provinces and the national governments, and so on and so forth. Because at the end of the day, without their support, cooperation, and indeed encouragement, you might as well not show up. So you've actually got to do that work, you know, particularly well. And when it comes to governance, and there were a few areas of governance mentioned a little bit earlier as well, we're actually been very good at that and improving that over a long period of time too. You know, all the way from the regulator, the particular listing platforms and so on that there are around the world, and there's more and more of them, Charles. You know, that's an area that is actually improving quite well, that you are getting more and more platforms, and they've all got not dissimilar rules, regulations, codes of conduct, and so on and so forth. So we're certainly getting much better at that. And I do take the point about, there was a very good point made a little bit earlier about sharing. Everybody's got to get their fair share of all of this. At the end of the day, we're about growing value. So everybody's got to get a piece of that. Charles, thank you very much. I'm sure that didn't answer the question, but there you go.
No, thanks, Owen. That's very good. I think you're right. I think it's all about balance, and you're right. There's everyone. Majority of operators have been looking at CSR as an acronym, and then ESG is a new acronym. And as a result, it's transitioned. And Nana, what's your view on whether ESG really does flow through to assist resource nationalism to local communities, and even try and encourage ministries and administrations that foreign mining operators are doing the right thing? What's your view?
Well, I think it's actually a good thing. And a lot of the panelists noted that it's already been done in the past. It's just not been highlighted well enough. And it's important to highlight it, because the populists always look to gaps as to what isn't being done in the communities. And once you fill those gaps and show them that a lot is being given back, it sort of diffuses the argument as to why you got to take more from these companies when they are doing more already and they have a solid social license, because you have the communities behind you and the governments don't have too much strength to muddy the waters for you. So I think the emphasis there is actually great for all of us. And I mean, in the past, exploration companies like ourselves will probably not have anything to show for ESG, but we've completed a first review of ESG. We're doing a second review. We'll be updating our websites, where what we're doing at the community level, support that we give in schools, water, and employment. Basically, 99% of our staff are all local. And I think these all ticks the boxes, because we think we're onto a significant discovery that could get us into the path of production. And once we start filling up those or ticking those boxes, once it gets to the permitting phase, you can get the license much easily than ignoring those boxes and having to backpedal further down the line. So I think it's something that's going to help reduce the stresses on mining operators, and it's a good thing that's being talked about more often.
Yeah, no, I agree with that completely. And just moving on to COVID-19 and its impacts, and whether it's strangled growth this year, or whether we feel that growth may come back in 2021. Luke, what's your view in terms of how your investee companies have handled COVID, And all in all, overall, I do think that a lot of mining companies have handled extremely well in the African continent. What's your view?
Yeah, I think for us, being a private equity fund that invests in assets, it's been slightly different for us than it may have been for a producing mine. In respect to my own organisation, we've been able to handle this very easily, given we've got offices in Luxembourg, London, one here in Cape Town, and staff sitting in Johannesburg as well. We're used to working remotely. It's something we've been doing for quite some time with our team members. So for us, this was very smooth, and we've been able to operate with limited difficulty. Where the problem comes in is the companies that we've invested in. For companies that are in the middle of programs, obviously there's been a hiatus, there's been a slowdown. Whenever there's a slowdown in a development program, you've got a period where you're not doing work. And during that period where you're not doing work, you've got overhead costs that you've got to cover. The longer you can't work, the larger the increase in overhead costs that you can't cover means that you might not now have enough in the investment to cover the work that you wanted to do. So those hiatuses can cause problems, which can lead to budget reviews, those sorts of things. I think that's an important aspect. In respect of the market itself, now the borders have opened up in Africa. The effect of COVID hasn't been as bad here as it has been in others. We're starting to travel again, which has been fantastic. I just recently returned back, flew from South Africa to Ethiopia for 2 weeks. That was fantastic. And what I have noticed in South Africa itself is that, not just South Africa, but in other parts of Africa, is the public seems to be complying. They seem to be taking it seriously. When I was in Addis, everybody was wearing a mask. All the shops were open, but people were complying. And I have noted that. Whether that's got an effect on the lower numbers of fatalities and the lower infection rates, I'm not sure, but I have noted that. The biggest issue that we've found is when we've been in discussions with financiers for our projects to put them into production, those sorts of things. Those discussions need to be face to face. You need to finish them face to face. You can only go so far, over Zoom or Teams with those sorts of discussions. And what I have found is we've had a stall in those processes. And until we're able to travel again, we won't be able to finalise those processes. So I think many financiers are taking a wait and watch approach at the moment. They're not willing to invest at the moment. They'd rather wait to see which way this is heading. I think the people that get in early now for particular commodities are probably going to have a very good year next year. And there's a few of them. Obviously, gold is doing very well. You've got copper. I'm not sure when this battery revolution is going to happen for nickel and a few others, but my fingers are crossed. But me personally, I think with all the government stimulus that you've got floating around at the moment, a lot of that's going to be spent in infrastructure development. And I'm looking for a very good year in the mineral exploration and development space next year. That's my personal opinion. I think stock markets, particularly stock markets that are resource dominated, like your ASX, your TSX, I think they're going to do very well next year, and particularly for niche commodities. So if we get this vaccine sorted and we get that out of the way and we can travel again, I think we're all in for a very good year. They said they're making jokes about 2020. Well, it wasn't quite, was it? But no. maybe 2021 will be a little bit more positive, and I'm actually looking for a good year.
Yeah, I hope so too. And Jeff, just on Luke's comments there in terms of being frustrated with not actually having face-to-face meetings. I mean, that must have been something which has been frustrating with yourselves, with shareholders and potential investors. Has that been something?
Not at all, actually. I mean, interestingly enough, Zoom has played a great role. We've been doing virtual roadshows and all the rest of it, and it's been an excellent innovation, and one that I think we'll probably continue to use going forward. To be frank, it saves an awful lot of time and effort. But just in terms of COVID and the impact on business, and you made the question of point about stifling development. I mean, our experience has been 100% different to that. Good. In fact, we had 0 infections on any of our operating sites. Production was largely unscathed, or almost completely unscathed through the entire process. And in fact, we have developed our third mine, about to start pouring gold there in a couple of weeks' time. Right through this process, we've developed that mine ahead of schedule and under budget. So, the COVID has had virtually no impact on our business at all. Now you might say, well, how has that occurred? Well, how it occurred was that very early on in the piece, we imposed some pretty strict protocols around the way we did business. We did that quickly, we did it forcefully, and in doing it, we took on board the lessons that some of our executives had learnt through the Ebola crisis where they worked in Sierra Leone. So we used that prior experience. I think the other factors that were very material in our success were two things. One is that we've got an extremely good team of people working for us on the ground, and they worked extremely hard and were very loyal, and their families were terribly patient because some people had to work some very, very extended rosters. So without having the support of our workforce, we might have had a different outcome. And then I guess, dare I say it, we had fairly decisive leadership. We a core element of our business and the way we do business is we always do what we say we're going to do. And I said to our people at the outset, we were going to keep them safe, and we had to do things to make sure they were healthy and safe. And we've done that. And I think everybody bought into that as a process and were willing to comply with the protocols that were needed. So far from it stifling our business, we've actually taken our business ahead in leaps and bounds with COVID as the backdrop. So I guess there's all sorts of stories as to what might or might not happen.
Well, that's good to hear, and I think you're one of many who've actually haven't had as much impact compared to other areas. And William, what are the sort of protocols has Barrick been taking in across its African operations with COVID? Have you been the same with Jeff? Limited impact?
That was our operations, Charles. Look,
Yeah.
I think that from an industry perspective, I have to say the industry has coped very, very well because as an industry, our operations tend to be somewhat remote, and therefore under those circumstances, it's a bit simpler to isolate and so on. We've got, excellent occupational health and safety policies, principles, procedures, and practices, and so on. So it's been relatively straightforward handling crises like this at all of our operations. That includes Zambia, a number of operations in Australia, other parts of Europe and the Americas. So our experiences there have been quite good, not dissimilar to what Jeff has been describing. Haven't missed too many beats type of thing. So there has been impact in terms of rosters and shifts and getting people here, there and everywhere type of thing. We've all experienced a bit of that. Of course, the market, you saw copper drop from, $3 to $2.20, now back over $3 again. So you've had a good recovery there in copper. Gold has actually performed very well, up $400 in the past 12 months or something like that. Even zinc's having a bit of a run at the moment. I think that's, dropped down and then is back up again. We've seen it in met coal, one of our products out of Australia into China and other parts of Asia. You've seen that dip, then come back, and there's having another dip, a second dip wave or something or other going on there, Charles. So the experience has been on site, been generally speaking okay. I do agree somewhat with Luke there in terms of the face-to-face or mask-to-mask or elbow-to-elbow or whatever it happens to be. You do tend to miss that sort of, nearby contact type of thing, particularly if you're doing a performance review. It's a bit simpler to do it mask-to-mask than it is sort of over Zoom type of thing. But the impact has been in those markets. But the markets are rebounding very strongly. And you mentioned the stimulus, the fiscal stimulus that you will not be able to jump over. John Maynard Keynes, that great fiscal interventionist, would be very proud of the stimulation that's coming up here on the fiscal side. And the monetary interventionists as well, they've just excelled themselves with interest rates of zero and looking like that for some period of time. So really, really good fiscal and monetary stimulus. And as Luke says, we should all be one way or the other beneficiaries of that, provided we're ready for it.
Yes, absolutely. No, well said. And I think we're running slightly out of time, and so it's been a hell of a good panel. There's a lot more to talk about, but just some last words from Nana with regards to COVID and how you feel in terms of the future, how you think that mining is going to really make a comeback next year with the prospect of a vaccine and for 2021.
Well, I think the prospect of the vaccine makes things really bright. We were not impacted at all. We actually ramped our drilling capacity from 2 to 5 rigs through that period, established strict COVID protocols. So knock on wood, we've never had a case, but it was great because our drilling contractors had their own COVID protocols. So it was protocol over protocol that made a lot of people safe. And when they started lifting the travel bans, all consultants that could get on site had to be safe to travel situations. So it's been great. And I think that we missed the handshakes and the personal interaction, but I quite think that we've also been very efficient with GNA, where some Zoom calls could be useful rather than a flight to London for a couple of meetings. So I think we continue to do a bit of that. But I think overall, a lot of companies have hungered down, gone leaner, and once things open up, I think they will roll out and tap into it. So 2021 should be a phenomenal year. And I think we all looking and sitting patiently to enjoy the fruits of our labor in 2021.
Absolutely, Nana. And Willem, last word from you before we close up the panel. What are your views, prospects for 2021 without having a crystal ball in front of you with regards to 2020, which has been challenging to say the least? 30 seconds, last words from you.
January 2020, nobody would have predicted 2020. I think if the world economy comes back slightly, copper and all those things are going to rebound, which has been said. Gold might come slightly off, won't go totally off. And I think there's going to be a mad scramble for most governments, which are fiscally under enormous pressure at the moment. So that's what I'm forecasting.
Very good. Well, gentlemen, thank you all very, very much for your time today. Really interesting panel session. And yeah, wish you well and all for a much more successful 2021. Thank you all.
Looking
Thanks,
forward to
Charles.
it. Thanks, Charles.
Cheers,
All the
guys.
best.
Thanks.